Hey everyone, welcome back to the channel. In today's video, I want to talk about how you can get the best interest rate. My name is Zevi. I'm an owner of a company called Loanbrook Inc. It's a wholesale mortgage company, and I would love to share this information with you if you are in fact trying to purchase a home or refinance a property and you're trying to figure out how come rates are different everywhere I go. They may be slightly different, they may be a lot different. So let me shed some light on that. And if you're trying to capture that information, I think that this video will be a great one for you. So with that, let's dive right into it, all right? So why are rates different? Let me start off the top, and I'm going to illustrate this for you real quick with what I call par, all right? So par is basically the rate that we get as a mortgage company. Now, mind you, above us are the actual lenders themselves, the actual banks themselves. And anytime they issue a rate, they make sure that there's already compensation for them inside of that rate, all right? So that's number one. And so when we get the par rate, this rate right here is the house rate, meaning that if I give you that rate, that market rate is gonna be below anything else out there. However, I will not make any money on the transaction. All right, so how do I in fact make money as a loan officer, and how do you in fact get the best interest rate? Well, there's two ways for me to be able to do any transaction, and that's as a borrower paid deal and as a lender paid deal, all right? So what's the difference between these two? It's pretty simple actually. In this bucket right here, the borrower paid bucket, I actually pass on the par rate directly to you. Again, the actual cost of money to the house. And so if I did that without charging you an origination, then I wouldn't make any money. All right, origination might also be known as, let's just use a point, 1% for an example. All right, so this is how I would make money on this particular side of the equation. In this side, it's called lender paid. And what happens over here, this is a pre-negotiated contract with whatever lender we're going to be using to originate your loan. So it could be a bank, it could be a fund, it could be anything. But it's pre-negotiated, meaning that it's a question mark. All right, you don't know what the cost of money is. However, I do give you a rate, and if it's a competitive rate and you're happy with it, then on we go. All right. So what is the big difference between these two? In this bucket right here, the rate is exposed because you actually see the cost of money. And the way lenders make money, as they should, of course, but the way they do is, if I have, as an example, a certain contract in place here that, let's just say, is a 2% contract, right? To get to a certain rate, let's just say 7%, is going to cost more on this side than it will on this side. Now, both of these sides have the option to dial up the volume up or down. And what do I mean by that? Let's just say that I give you this par rate. And you say, Zevi, although this is your cost of money, I want a better rate than that. Okay, no problem. You want a lower rate. This is called discount. Because what you'll be doing now is you'll be trickling down the scale to a rate that you actually like, but you'll be paying discount points for that, all right? On the flip side, if you wanted to go up the spectrum, meaning that, Zevi, I like your par rate, but I don't really want to pay whatever it is, a point. Then once you start climbing up, let's say right over here, this might be a credit of 1%, because as you go up, there's no cost. It just becomes a credit. Now, mind you, unlike the old days, any credit in the loan does not go to the loan originator. It goes to the borrower directly. All right? Whether it's here or here, it doesn't really matter. And that was the big change back, I believe it was in 2007 or 2008, when they introduced NMLS, right? So the big change was brokers were getting rebates on the back end when rates were inflated. Nowadays, if you inflate a rate, you simply create a credit that's going to go to the borrower. I think that's really important for you to know. So once you get this credit, if you wanted to offset, right, the cost to the loan, you could. However, the way this is structured is you can't really use credit to offset a point if that's what I'm charging you. You could offset closing costs. So that's just a rule that's in there. But without getting too technical, on this end over here, right, it would basically be exactly the same. You know, if you wanted to get a lower rate, then you would pay discount points. If you wanted to, you know, go up to offset your cost, whatever it may be, then same thing, you just go up and your rate, you know, goes, and let's say instead of 7.25, and then you get a certain amount of credit towards your closing costs. My point is that when you know the cost of money, if I charge you whatever it is that I charge you, then you basically know that this is right here the cheapest rate you could possibly get, the cheapest rate the house could possibly get. There is no negotiated contract at this point. It is what the lender has available for this particular program, all right? Whereas here, because broker compensation is tied to rate, then we don't really know what the broker compensation here is, okay? And so whatever the rate is basically whatever it is that you're getting, and if you like it, great, and if you don't, you know, then go down the scale, pay discount points, go up the scale, and get a credit. Hopefully this makes sense to you. If it doesn't, for any particular reason, or you have questions about any of it, feel free to drop me your question in the comments below. I'll be happy to answer it, all right? On the other side, if you are trying to get qualified for a mortgage in any capacity, whether it's a purchase or a refinance, and you want to run through this scenario with me to see how you can get the best possible rate, I'll be happy to do it with you. My number is 818-697-8220. All right? If you like this video, please give it a thumbs up. And if you want to see more videos like this in the future, then please remember to subscribe to the channel. Otherwise, I really appreciate you watching this, and I'll catch you again on the next video. Take care.